Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Thursday, January the 16th. The year's 2020. Let's talk trading environment. If you've been checking the your email or listening to podcast or just surfing the net, you've probably come across things about habits and minimalism and morning routines. But the thing is, it seems like environment really plays or is the key role in whether or not you succeed. So, for example, if you want to get up and exercise, if you've already set out your workout clothes and shoes, so when you get up, they're right there, they're really easy to put on, and you've created an environment such that you have to you almost have to do it because it's right there. And furthermore, if your alarm clock is on the other side of the room, so you actually have to get out of bed to turn it off, well, hey, guess what? You're up. Since you're up, well, you know what? You might as well put on the exercise clothes and go work out, right? It's all about environment. So what's that got to do with trading? Well, what does your trading environment look like? Are you set up in a quiet place and there's no distractions? It's just you and your trading platform. Maybe you have some soothing music going on the background. Maybe you have a post-it note or a big poster or something. So every time you look up from your screen, you have a reminder of what you're supposed to be doing. Or maybe you have something right on your chart where you make notes, like this chart right here. This is an MT4 chart, using my notes indicator, where you can actually put notes on your chart telling you what you should be doing. It's all part of environment. And is it easy for you to enter a trade, or do you have to take a few keystrokes to bring up that trade so it's not just one click away? It might be 3 or 4 or 5 clicks away. You have to ask yourself, is speed really critical in your method, in your system? Is a split second going to make all the difference between profit and loss? I mean, if you're thinking that, maybe, just maybe, you might want to rethink your system, rethink your approach. I mean, don't you get enough warning ahead of time that, hey, a trade's on the horizon, so I'll watch this for a little bit? In fact, you might even have that trade preloaded with a buy stop or limit or a sell stop or limit. And you just sit there and watch to see if and when it gets triggered. But I mean, your environment, is it something where you're just so frantic? Is your environment making you frantic? Like you've got all this stuff on the charts and you're flipping back and forth between H1 and H4 and M1 and W1? Or is it just calm, cool, and collected? Like, what was that movie with Mickey Rourke in 9.5 weeks, when he's just sitting in his office? I think his feet were up on the desk, or maybe he was leaning back in his chair and he's just looking at the screen doing his arbitrage. There was no hurriedness at all. It was just so calm, cool, and collected. Maybe I should even, I don't know, there's all these copyright things. They might kick me off of YouTube if I show that clip. So I'll just pass on that because I don't know all these little details they've got now, all these disclaimers and stuff. But anyway, back to the environment. Your trading environment. The simple question is, does it work for you? Does it help you? Or does it work against you? Is it harming you in some way? I mean, really, do you need 14 different monitors and 3 different news channels and Kramer's, screaming at you while you're trading? I mean, some of that stuff I think is really funny, but most of it's unnecessary. So just take a little inventory and maybe you can clean up your environment. Maybe just see if there's just one thing you could do that you don't, you got something there you don't really need, so you clean it up. Because chances are this isn't an add to, this is a takeaway. You know, I forget, there's some kind of quote about you keep removing things until you can't remove anything else, something like that. So, but along those lines, there's one thing you can't remove, and that's your risk management and money management. It's just so important you have them in place on each and every trade. They're part of your trading plan, your trading tactics, your trading strategy, your trading method. You just have to have that handy. That's something that you need in your environment, so you always know what your position size needs to be or what your stop loss needs, where that needs to be. It shouldn't be a question. It shouldn't be left up to chance. You should know that ahead of time. You know, if you take the trade at one level, the stop loss, if you're using the same position size, if the stop loss makes no sense, you need to move it further away, then you need to decrease that position size. So when that stop is hit, you don't lose any more on that trade than you would have on any other trade. So it's just something to keep in mind. And boys and girls, fellow traders, as you all should know by now, these videos are for educational purposes only, and your results may differ from mine. And that trading and investing is very, very, very risky. You could lose all your money. So if you're seeking financial advice, trading advice, investment advice, you need to seek it from an accredited financial professional. One of those people that have these certificates on the wall proudly displayed saying that they're a certified, accredited financial professional. They've got a license. So that way, when you lose your money or they lose your money, you took their advice and you lost your money, you know you got your advice from an accredited financial professional, somebody with these fancy certificates on the wall, rather than some guy you've never met, you're watching his YouTube video and he's talking about all this stuff, or somebody on the internet, on a blog or some trading forum that, has all these great ideas. So once again, seek your advice from a professional, accredited financial person. Okay, disclaimer way out of the way. I went overboard today, but I just think it's funny. So as you can see here, dollar yen hasn't filled the gap, and the pound franc hasn't filled the gap, but the other gaps have filled. Now, if I remember correctly, yesterday, Wednesday, I think there was 5 that hadn't filled the gap. So ye of little faith, you missed out on that opportunity. And the dollar yen is 45 pips above the previous week's high. So we broke this level here. Remember, there's this gap that needs to be filled from this point to this point. There's that gap. But there's also a gap here between the low and the high. That's a different gap. This is just the close to open gap, close to open gap. This is a low to high gap. So let's just see if those gaps fill. And here on the daily, we're approaching the year high that we hit 2 days ago. We're 8 pips off of that. And yes, for my the one trading viewer that was into the euro. You can see here we're 74 pips off the open, 90 pips off the yearly high, 50 pips above the yearly low. And you see this big green candle. You see price return to the open. So that's what you look for. There's another big green candle here. Maybe price will return to that open. First day of the week. Now we started off in that weekly range. We broke above it by 18 pips. So once again, these horizontal line trades are showing that they can't be profitable. And the thing is, if you're watching these videos, you see this happen every day. These type of trades can prove profitable. But your results may differ from mine. And that's why we use a stop loss. So you see here, just taking this trade here at this line, there's no guarantee. So you go, but you know what? It just seems like this works. So you take the trade, you set your stop, and you see what happens. And right here on the weekly open, see it's way down here. This is Thursday. We're far above the weekly open. And on the month range, we're still at 256 versus a 302 average over the last 24 months. That's 2 years. And no inside bar trades on dollar yen. But let's just see here on the euro. We have two possibilities. Almost broke out of the week and month inside bars here, but now we've returned back down. Let's see, the pound dollar is showing an inside bar possibility right here. So long at 30.96 and short at 30.42. Those are the two triggers that we'd be looking to take. And let's take a quick look at dollar Canadian. 30.67 is the long trigger, 30.31 the short. And you can see here we got the 30.31.6. So unless you were anxious, that wouldn't have triggered. But if you jumped the gun, chances are you got stopped out, unless you put your stop up here and then you're still in the trade. Daily range 3/100. So we're just not getting the ranges as we used to. You'd have to really run a frequency distribution on these pairs to see what the most likely range is going to be. And that's where you look for the breakouts. And we broke out of the previous day's high. Put in a new yearly H1 highest open right here. And we're 4 pips off of that at the moment. But notice we also put in a daily H1 lowest open right here for today. And you get one chance to get back in it. Now, on the buy zone, we took out the pivot that was right at the open. So that was kind of a no-brainer. But we also took out a missed pivot here at 110.01. While we've got this chart up, let's just take a quick look here at the euro. Oh, for some reason, I need to switch this over to the dashboard. And I'm almost running out of time, but we don't want to change all the charts on this particular one. So we see the euro here took out the pivot also. Rat zone, green rats are ready. On the euro here, we took out that monthly pivot, but on the yen, we still haven't. But fellow traders, that's going to pretty much do it for today. So just remember, it's not what you trade, it's how you trade.